Greetings from the Charter School office. I'm Albert Bertram, the finance specialist for the office. So this sheet in front of us is the review of the audited financial statements. So this essentially takes the 40, 50, 60 page audit and summarizes it into a 4-page sheet. We use this in our office as a source of information for the renewal process, so it's important to both us and the school in that respect. And it's a form of communication between myself and others, since not everyone is going to go through and read all of the audits. So this should also make it easier to compare from year to year, since you're only comparing 4 pages instead of digging through all the different pages of the audit. So with that, we'll move on into the sheet. We'll start up over here, statement of net position. This shows the net position breakdown for the school's current assets, etc. To show where this is at in audit, we'll look at total assets 4,814,536. If we go to the audit, we'll see the statement of net position. This is where all this information is derived from. And then we'll go down to total assets 4,814,536. So this is the paid. So this is where this information is derived from. Going back to our sheet, we'll move down. We'll see that there's the ending net position and then the previous net position. So this previous one is the June 30th, 2013 net position, and then the ending net position is the current June 30th, 2014 net position. So the net position actually increased from last year for American Montessori Academy. As I move down, we get to the balance sheet area. These are general fund current assets, just to specify, and so these I'll show you where this is at on the audit as well. And then over here we have our fund classifications. So if we go back to the audit, the balance sheet is 2 pages after the statement of net position. So 1, 2. There's balance sheet. Now there is these other columns. We're just going to focus on the general fund for this spot. We do look at this other stuff in our office, but for this sheet we just look right here, and you'll see you see what these funds are coded as. And then as we move down, we'll see our fund balance classifications, our non-spendable, and then our unassigned. So if we go back to our sheet, here's the cash and such over here for our current assets. And then if we go over here, we'll see our unassigned and non-spendable amounts. So in case you're wondering, unassigned is amounts that are available for any purpose. These amounts are reported only to the general fund. There is no assigned fund balance, committed fund balance, or restricted fund balance. And then non-spendable are amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So this non-spendable is associated with the prepaids over here. That makes sense because you essentially can't spend what you've already spent. So moving up to the upper right hand corner of the sheet, we'll see the breakdown of the funds for the year, the beginning fund balance, the revenues, expenditures, other financing sources, net change, and then the ending fund balance. So underneath that, there's a couple of calculations. The general fund divided by revenues takes the ending general fund balance, divides it by revenues. The general fund minus restricted would subtract a restricted amount if there was a restricted amount down here, which there's not, which is why those two are the same. Then general fund divided by expenditures takes the ending general fund and divides it by expenditures. And then the ending general fund divided by the beginning general fund takes into account the change. So if this number is above 100%, then there is a positive change in the general fund. If it's below 100%, then there is a negative. So you can see that since this is above 100, there was a positive change, which makes sense. So that's what that is. As we move down the sheet, we get to this section with the four debt/management information. So these 4 items here are basically a summary of the detail in the note section of the audit, and that note section is actually recorded on the 4th page of this sheet too. So notes payable is the state aid notes. If it's not state aid, it's usually a short-term borrowing of some sort. So that's what that is. Revenue bonds, kind of self-explanatory. That's the long-term debt for the school. And then this capital operating lease, this is actually the operating lease for the other building for American Montessori Academy. So here's the management fees, which again is derived from the audit. All of this information is. This calculation right here just takes the management fees and then divides it by the total revenues. The total state aid revenues. So if we come down here to our next sheet, we'll see the total state revenue sources. That's what that is. Then earned divided by fall 2013. Same thing, takes the management fees, divides it by the fall 2013 count. Just a way to compare. As we move down the sheet, we'll see our square footage. Let us know if this is off by a little bit or anything. We try to keep these up to date, so if there's a change of some sort, let us know. So this square footage is used for several calculations. If we come over here, we see revenues per square foot, so we take the revenues divided by the square footage. Same thing with expenses, then difference. Now the payment per square foot is a different calculation, so that takes the in the case of American Montessori Academy, it takes the two building financing sources, so the operating lease and the revenue bonds, and it combines them and then divides it by the total square footage. So essentially, I have the written explanation down there, but it takes the interest and principal payment on the revenue bond for the year and the operating lease amount right up here of $697. So it adds both of those together and then divides by the square footage. So that's where that comes from. Now when we move back over here, we have operations and maintenance per square foot. This takes the line item of operations and maintenance again on the next sheet, right down here, and then divides it by the total square footage. So that's where that is from. And then square footage divided by the fall count just takes the square footage and divides it by that fall 2013 count, which is the corresponding count for the June 30th, 2014 school year. As we move down to page 2, the percentage comparison sheet, this takes that box up in the upper right hand corner of page 1 and makes it more detailed, so it's easier to compare from year to year. So this is June 30th, 2014, current year, the most previous audit, and this is June 30th, 2013, and then this is the difference column, so it makes it pretty easy to compare from year to year. And then there's total revenues and total instruction. So below this, there's going to be a calculation that involves both total revenues and total instruction. So as we move down, you may notice some of these coding accounting codes. There's been a couple questions related to those, so I thought it'd be beneficial to show this. In Word, if you put the accounting manual into Word, you can come up here, push find, and then come over here, type in whatever you want. So if we were using basic program as an example, push enter, make sure you're on results, and then you could kind of skim through this document and it'll show you where it's at in this document. And then if you wanted to come back over here, you would see the code number of 110, and then basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and emotional handicaps, includes pre-K. So then if you go down, you could see the different branches of that 110 classification for elementary, middle school, etc. But that's not really relevant for this discussion. So that's a good tool, and then you could figure out what these other numbers are. I didn't fill in some of these ones that aren't used for every school, so they were kind of against my template, so that's why they're not all labeled like that. So as we move down, you should see the same ending fund balance here that you did on the upper right hand corner of page 1. This is last year's again, this is this year's. As we move down, we'll see the budget comparison, which takes the original budget, final budget, and then actual, and then this is a budget difference between the actual and the final, and then percent change. And then this little note here is just I don't think this shows up on your sheet, but this is a reminder for us in the office and myself that the original budget is due July 1st, so that's why there's sometimes a big difference between the original and final budget, because there's a lot of information that comes available after that time, especially the count data. So that's that. Here is the instruction calculation and revenues I spoke about earlier. So this takes that instruction total, divides it by the total revenues, and then puts that in a percentage form. And this lets you see the trend for the last 3 years essentially. And it's actually trended down and then back up, so that's good. And then over here we have another calculation, just the total revenues divided by the fall 2013 count, and then total expenditures divided by the fall 2013 count, and then the difference. So moving on to the enrollment numbers page, these numbers are all derived from SEPI. And then this last one, if you notice I didn't highlight that one. That one is actually the unaudited number I got through Epicenter, the DS4061. So these will be updated as the numbers get updated, but I've been making videos and I haven't got to the audited numbers yet. So that's what that is, if there's any question about that. Moving over here, we have the equation, which just shows the percent change from count to count, essentially. So that's what this table is. Down here, we have a graphical display. This is a display of the count data, not the change, obviously. So here's this shows the trend for those who are visual people. So that's that. As we move down, these are again, these are from SEPI. These are the free and reduced lunch counts. And then over here we have the percent free and reduced lunch compared to the corresponding fall count. And then down here we have a graph that shows the trend again. As we move down to page 4, this is a section that summarized the top, those 4 boxes on page 1, on the bottom middle center of page 1. So we have our notes payable information, which is the state aid note, the revenue bond, operating lease, and then a capital lease. The capital lease was for equipment, so that wasn't included in the calculation for payment per square foot, just so you know. As we move down here, here's the management company information. You'll notice that there's page numbers here, so this stuff is directly from the audit, just word for word, and these are the corresponding page numbers if you ever wanted to look them up. There was no findings, which is good. There's a quick note that I put on here from page 8, that the charter was issued in July 2012, and it was an 8-year contract, so it should go to 2020. So, and then this calculation explains the calculation for payment per square foot I already talked about. So, this document is reviewed. Again, if you have any questions, any comments, anything, let us know. We're interested in your feedback. We hope this was a benefit to you, and we thank you for all you do for the children of Michigan. Have a good one. Take care.